Welcome to the second session of the market breakdown with Lester King, the founder of the systematic PCB trading solution. Okay, let's look at Gbpusd. Who can tell me why do we need to measure the dollar? Meanwhile, we are trading currency pairs. Who wanna try? Who wanna tell me why? Someone who thinks he knows why we should measure the dollar when we are looking at the currency pairs. Meanwhile, we are trading currency pairs. Who can tell me?
Hi, sir.
My brother?
I think it's because of the coloration. What do you call it? The coloration between the dollar and other currency pairs. So if GBP USD, Euro USD is going either when the USD currency pair when it's going down, Euro USD is going down, GBP USD is going down.
Okay, can I ask you a question? What do you guys know about base and code?
So what we know is if GBPUSD, GBPUSD is the base and USD is the code.
Okay, now if you were to use the base and the code thing into combining with the DXY, how would you explain that?
Um, I don't know how to explain that. But I'll say all the USB pairs, we will see, we'll say all the USD pairs. Uh, if the code the base is strong, it means the code is if the base is strong, the market will be moving up. The code, if it's not strong, the code will be moving down.
So in a simplest format, when we measure the dollar or analyze the dollar, meanwhile we are trading currency pairs, it is simple because we want to definitely know if the dollar is going to gain strength or it's going to lose strength. So now if you are trading a currency pairs, which is GBP USD, means GBP, it is the base, and then USD, it is the code. Now, if the dollar is gaining strength, unlike, for an example, what we've been anticipating on the DXY right now, it simply means that if the dollar continues to go up, we are looking at the code to gain strength against the base. I don't know if that makes sense. So we are actually just looking at the GBPSD to continue to go to the downside direction. If the dollar keeps on continuing to go to the upside direction, because we are trading two currency pairs, which is the GBP, which is the pound, and the USD. I don't know if that makes sense or I'm speaking in parables. Let me know in the comment section if that makes sense or it doesn't make sense. Let me know in the comment section if that makes sense or it doesn't make sense. Oh, okay. So right now here we are looking at GBP USD market breakdown. We're going to be starting on the monthly time frame and look at what could possibly happen on the GBP USD. So GBP USD, we were trading at an area of interest for the past previous week. I've spoken about this, and I told you guys that this was the area of interest that I am talking about, which where every time the market tapped into this area, we are mostly likely to do what? To turn back from this point, to have a reversal that's going to definitely take place. So if you look at here, this is the monthly time frame, right? Okay, cool. So if you look at here, if you put your trend line, you're definitely going to realize that we've had multiple touches from this very same particular area. Now, the area has proven itself that every time the market comes back into this zone, the market keeps on doing what? It keeps on tapping back to the low, to the support, I meant to say. But that is not makes sense, but which news controls these currencies? News are dependently on the currency that you're trading. So if you're trading a US GBPSD, let's say for an example, the dollar is gaining strength and then the GBPSD is going to go down. And then what happened that happens in the US, it has an impact to make the dollar to be weak. And then GBP, it falls under Britain. So if anything happens on the Britain that can what you call boost the momentum or the strength of the GBP. Even if the dollar is going down tomorrow, you can start seeing the GBPSD going to the upside direction. So that's how it gets affected. So yeah, now as we're still on the GBP USD, the market has been tapping into the very same area and turning back. So we were critically sitting at an area of interest. And one of the most important thing that made me happy, if you remember very well, it was last month when it closed. So in the beginning of March, actually. So when the market closed with this tweezer top right here, I definitely knew from there that we were going down. Because if I think I just said something now, I said the bigger the time frame, the less the market it lies. But the smaller the time frame, the more the market can lie. But on the bigger time frame, I can rest assure you, with so much factors of confluence, there's no way the market can go against you. I can rest assure you. So we were sitting at an area of interest where the market has been touching into this particular area multiple times and turning back multiple times and doing what? Turning back from this zone, turning back from this zone. Now, when we approached this area this time around, as the market was trading here, it was a total different way because we had what we call a structure, right? So let me remove everything so that we can be on the same page. So we had what we call a structure, right? So this is the market structure. So as the market was going to that particular area of interest, we actually had what we call an uptrend, as you can see. If we are together. Now, this uptrend was creating what we call higher high, and then higher low, higher high, higher low, higher high. And then we are anticipating the next touch from this particular area. But the most interesting thing here is that one, we are riding on an uptrend, which is a very clean, beautiful uptrend. Now, looking at this higher point, the market then began to create what we call equal highs. Besides the equal high, remember we are sitting at an area of interest, which the market has been tapping into multiple times and failing to break out of that zone. And by doing that, we also have what we call candlestick formation, which the market is trying to communicate with us that there might be some sort of reversal. And besides that, remember we are sitting at an area of interest, but at the same time, the market gave us what we call a rejection. That's another factor of confluence. Now, I want to bring the EMA. So the EMA, it is currently trading below the market because remember, we were trading on an uptrend, which was bound for the EMA to trade below the market and then the market trade above because we were on an uptrend. Now, the only thing that we can use with the EMA is the fact that the market is trading close to the EMA, which means the market is not overbought. It's not overbought in this particular area. So we do have a chances that the market will continue to come back into this particular area that we want them to, which is this particular point. Now, if you look at here as well, you'll definitely realize that we've got a pattern in this particular movement. What pattern do you think we've got here, guys? One person who thinks we've got a pattern? We've got a pattern here. Makes sense, but which news controls this currency? I don't know if I answered you or what. Let me check the time. I think I did. Yeah, I did. Okay, what pattern do we have here? Raymond D. Mlandeni.
We've got an M pattern, double top.
Thank you so much. That's correct. So we've got what we call an M pattern. Now, another one. What does an M pattern symbolize when it is formed in the market? What does an M pattern symbolize, or what information it carries when it is formed in the market? Another one. Another one. Raymond, I need another person. Guys, another one. I'm not teaching Raymond alone. Another one. Mr. Bongana, are you raising your hand? Okay, Mpahlela se. Guys, I'm not teaching Raymond and Mpahlela se on. So I need every one of you to participate. Mpahlela, you can go ahead.
Yeah. Okay, so M pattern represent reversal or high chances of the market turning to the other direction.
Okay, perfect. You are very right. The M pattern represent reversal, right? But is this already a complete M pattern? Another one?
Not yet,
Why?
because it hasn't traded below the neckline.
Thank you. We haven't reached the neckline. That's very much perfect. You are very right, right? Now, another question before I continue. What is the use of the equal high?
The equal high, okay, the equal high, when the equal high forms, it represents the resistance. That's where the resistance happens.
Okay.
Yes.
Okay, you are right,
Yeah.
but that's not the answer that I'm looking for, but you're right. You're not wrong. You are correct. Another one. What's the meaning of the equal highs? What's the use of the equal? What formation does the equal highs create? We don't have a lot of time, guys. Please raise up your hand. Let's continue. I'm not teaching Mpahlela Se and Raymond. Bongani, what does equal highs mean, brother?
Coach, it means equality.
Thank you so much.
Market, coach.
Thank you so much. That's what I was looking for. Because remember, the market has been creating high highs, right? It's been creating high highs, high low, high high, high low, high high. Now, meaning the buyers were in control of the market. Now, when we then begin to see the first equal high, it means there's some equality between the buyers and the sellers in the market. You should keep that in mind, right? It's nice being part of this market breakdown. You are learning at the same time we're analyzing the market. Okay, cool. So what we're anticipating here is that we want the market to pull back into this particular area. We're not going to look into the future, whether the market is going to continue to go up or whether the market is going to continue. That's none of our business at the moment. What we are looking for at the moment is for us to be able to trade and be able to make money. That's our main focus. So everyone understand what we've got on the monthly time frame. So we've got more factors of confluence to sell than to buy, right? I've pointed out all the factors of confluence step by step. Now we are moving into on the weekly time frame. So the weekly time frame for me, it's almost the same as the monthly time frame. It's just a little bit different there and there with some few adjustments as well. But can rest assure you they're definitely the same for me, right? They're definitely the same. So if you can look at here, they're trading on an uptrend, right? We are trading on an uptrend. And then the difference is that we don't have an M pattern. This is not an M pattern, but we've got what we call equal highs right there. And I think instead of M pattern, we had what we call probably a little bit of a small sideways trend right here. If I can call it, right? We have a little bit of a small sideways trend right here. So which we could see the market pulling back into this particular zone because this is the last previous low. So we would anticipate that our next shift, it should come around about there. But in the bigger picture, the area that we are anticipating is this one, I'm anticipating that the market must come back to this particular area. And then immediately when the market gets into this zone, it's going to tell us in terms of the candlestick formation if they're going to continue to go to the downside direction or the market will continue to go to the upside direction. But all in all, we are still very much bearish in terms of Gbpusd. The reason why I'm not going to dwell too much on the weekly time frame, it is simple because the weekly time frame, it's the same if you look at it with the monthly time frame. So we can't waste too much time on the same thing. If you know how to spot type of market behavior, you're going to definitely see that this is exactly the same thing as the monthly time frame. Let's quickly look at the daily time frame, right? So in terms of the daily time frame, I'm more interested into the structure more than anything because that's what has been very much useful for me to be able to understand what the market has been doing and what we are possibly trying to catch in this GBP/USD market breakdown. Now, I'm going to take it a little bit up from where we started with the movement because we didn't just catch the movement on Friday, but we catched it from the beginning where the market started. And I've been creating videos on TikTok trying to show you guys what could possibly happen and what is yet to happen on the GBPUSD, as I'm still doing and I'm still going to continue to do and show you what we could see. So we definitely previously were sitting at an area of interest where we had multiple touches from this zone. If you can see here, the market it was a bit choppy, but you could definitely see that we were sitting at an area of interest where we've had multiple touches, the market touching into the very same area. Now, when the market broke out from this zone, and then when they came back to retrace, I was 100% sure that we were going to have some reaction going back to the upside direction. I was still watching GBPUSD and I traded it. We were making some profit. The market went and create what we call, this was the lower low and then this was the lower high, because this was, I meant to say, this was the higher high and then this was the higher low and then this was the high. Let me remove this so that I don't confuse you too much, guys. I know you guys are already confused. So this is what happened. So this is the higher high and then this is the higher low and then this is the high because the market failed to go and create a new high and then this is the lower low, right? Now, when the market gives us this lower low after they broke out from this area of interest, I then anticipated that the market was going to come back, retrace into this area before we have the next new lower low. And then when the market turned back from this particular area, they gave us what we call a tweezer top, right? And then after this tweezer top, we had this beautiful shift, market going to create a new lower low, right? And then I definitely knew that the market left what? They left a previous lower low. I wanted them to do what? To come back into the zone. And then when the market came back here and then they gave us this bearish engulfing, this bearish hemapin bar, I then told my team that, guys, we are going to have a continuation to the downside direction because remember, because on the bigger time frames such as monthly, weekly, the market was showing that we are very much bearish. The market, as it was maintaining the structure from there, I then definitely knew that we were coming back into this particular area before we have the next impulsive move to the downside direction. Right. Then on Friday, I said to my team, this is what we are going to look at. We've got a neckline previously right at this point where the market left. But even though they did retest into it, they broke and retest. So this was a double bottom. Then the market broke out from the neckline, came back to retest. They kept on creating these high highs and high lows, high highs and high lows. And then after that, they broke. Then I anticipated that we were coming back into this zone before we have probably the next shift back into that lower low. And then we continue to go to the downside direction. So what we're looking at here, we are looking at the market, which is following perfectly the structure. As you can see right here, the market is creating what we call, this is the first higher low, and then high, and then lower low, and then lower high, and then lower low, lower high, lower low. What are we anticipating? We're anticipating a push back into this particular area before we have the next impulsive move to the downside direction. We're going to see which area probably we're going to touch into. There was this very interesting area on the, I think it is the weekly time frame. Let me quickly go back into it. Oh, let me use the monthly time frame, actually. We're going to find something very interesting. So on the monthly time frame, remember, I want you to remember this. So we want the market to complete the M pattern, right? So we want the market to complete the M pattern. So this is what we're going to do. We're going to draw our line into the neckline. So this is the neckline, right? So we want the market to trade out of this, and then we're going to drop down to H4. So when you come into H4, well, no, we're not on H4, we're on daily. Okay. So when we come back into the daily time frame, right? As I told you, I said I'm anticipating that the market must do what? Must continue to go down a little bit before we have the next retracement back into this zone. So remember, we want the neckline, we want the market to trade out of the neckline. So it's either we're going to have these two scenarios, right? It's either the market might retrace from where it's at. It's either we might see something like this, then the market breaks out of the neckline, and then this particular area will then become a neckline, right? An interesting area. Then the market will probably do what? Will probably come back, retest, and then we'll continue to go to the downside direction. Now, let's quickly look at what on the monthly time frame we have done. So on the monthly time frame, the market would have broken, came back to retrace. Okay, let me do it like this so that you guys can see it properly. Let me put a little bit far so that there can be a difference, right? Okay, let's go back into the weekly time frame. No, I want the monthly time frame. Okay. Okay, so on the monthly time frame, this is what is going to be happening. So the market will broke from the neckline, come back, retrace, and then will continue to go to the downside direction. So if you look at here, the month would have tapped into the very same particular area. So this will be the low that we are anticipating. Right? Coming from the small time frame, looking at the neckline, the market will break, come back, retrace, and then will continue to go to the downside direction. Now, we were on a daily time frame. I was just trying to show you how everything is going to connect at the end of the day. Now, if you look at here, like I was saying, we might see the market pulling back from this point to go and tap into that previous lower low. Let me remove this just a little bit. So we might see the market probably pulling back from here. But if the market is going to pull back from this zone, we are going to be controlled by the candlestick formation. So we are going to pay attention into the market, what the market will be possibly doing from here. We are not going to just say the market is going to pull back, because there is a possibility that the market can still go down somewhere right here and then come back to this zone, and then they go to the downside direction. So if the market never communicates from this point right here, then we are not looking at the market to reverse anytime soon from now, right? Now, I want us to quickly go into the H4. So on the H4, I want us to focus on something, right? So our main focus on the H4 is going to be the type of trend that the market is moving with, right? The type of trend that the market is moving with. So if you look at this on H4, you're definitely going to realize that we've got a very beautiful downtrend. Okay. Now, the market has been respecting these zones, right? Has been respecting these areas. So our next low point is just right here. Right? Now, I'm going to try and apply the fib retracement as well. So if the market is going to pull back into this particular area, which is our next low point, let's take it from where the impulsive move started from here. up until to this last point, which we are anticipating, right? Which is this area. Now, where is the 50%? The 50% will be around about this particular area. This will be the 50% before we have the next impulsive move to the downside direction, right? But before we get our hopes high, thinking that the market is going to retrace, we want the market to give us some sort of communication. If the market will continue to reverse from this point, or they will continue to go to the downside direction. But at the end of the day, the market will continue to break because we have a very strong bearish structure on the bigger time frame. Then what are we anticipating right now? We're just going to wait a little bit in terms of the Gbpusd in order for the market to do what? To communicate. We need some factors of confluence in terms of the market here, that we are going to go back to retrace before we have the next impulsive move to the downside direction, right? Once we get the factors of confluence from here to buy, we are definitely going to buy. And also, we will definitely have to look at the DXY, what it will be doing. If the DXY, it will break, probably promise to come back and retrace, and then before they have the next impulsive move, then we are going to do the same thing. So in terms of the moving average, as I've measured it from here, when I've held it from the beginning, from the top up until where the market is sitting at right now, the 50% is around about next to the trend line. But if they're going to pull back into this zone, the 50% is just right here. The market might pull back here, and then we have the next impulsive move to the downside direction. So that's what we could possibly look for. But we still yet to get a confirmation if the market is going to reverse or not. At the moment, we're still just anticipating based on looking at some factors of confluence. But we still have to take some time and look at the market, what it will be doing tomorrow right here. Because in most cases, I'm going to tell you this, when the market has created a very huge impulsive move, it's most likely to rest before it creates another impulsive move. So we might probably see the market before we pull back to the top, they give us some sort of like a consolidation before we have the next impulsive move, then before they go to the downside direction. I don't know if I am making sense or I'm speaking in parables, right? So we are going to wait for some factors of confluence. I always say, when you analyze the market, you look at the monthly time frame, weekly time frame, daily time frame, H4, to understand where the market it is going, right? When you're looking for an entry, you are definitely going to have to focus on 1 hour, 30 minutes, 15 minutes, and then 10 minutes, such as 5 minutes, in order for you to find your entry. What do you then look for in the small time frames? When you're looking for your entry, you're going to look for market structure. So if the bigger time frames, such as the monthly, weekly H4, the monthly, weekly, daily H4, they're saying the market is going to go down. When you drop down to small time frame, you want to see the market creating what we call lower lows, something like that. Lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows. So you are not going to look for some buying momentum if you are looking for a bearish movement. So you're not looking for such things. So you are looking for what? You are looking for a bearish structure, such as this one. I don't know if guys I'm speaking in parables or you guys understand what I'm trying to teach you. So if whatever that guys I'm saying, it's clear, you can write in the comment section that it is clear. If you are still confused, you can write in the comment section that it is definitely very much confusing for you. But this is what I'm anticipating on Gbpusd. I want them to push a little bit down to come back into the zone. When they come back to this area, then I want to see some factors of confluence, such as the candlestick formation, to say the market will then begin its retracement going back to the area of interest or to the previous last lower low. As you can see, we have this zone that the market kept on tapping into previously at this particular area. So what would I want to see? I definitely want to see the market pushing a little bit down to the zone before we have the next impulsive fully retracement. Then we continue to go to the downside direction. Are we clear? Is there anybody who have a question? I do have a little bit of time to take a question. If you do have some question that you want to ask me. If anybody have a question, you're more than welcome to ask. I do have a little bit of some time for you to ask me a question. Anyone who have a question? It's difficult to analyze the market. I see some of you are already even on top of your bed. You want to sleep. Okay, Benjamin.
Yes, sir. Good evening.
Yes, my brother. How are you?
Fine. I want to know the cost currents of DXY on DXY dollar. The cost currency.
The what?
The cost currency of DXY. If it is base currency, what is the cost currency of DXY on its chart?
Okay, so it differs because it depends on the currency that you're trading in that particular moment. Some you could be trading USD JPY. So on USD JPY, it simply means that the base is the USD. In this example right here, GBP USD is the base and then USD is the code. So if
So when we got the chart of DXY dollar, we found the two type of candlesticks, bullish candlestick and bearish candlestick. So we don't know how to differentiate the cold currency and base currency of DXY dollar.
you don't look at DXY like that. You use DXY to measure the strength of the dollar because you are going to trade currencies which are paired with US dollar. So let's say, for an example, you are looking at GBPUSD. I said to you, GBPUSD, GBP, it is the base, and USD, it is the code. So this currency, it consists of 6 alphabets, right? So the 3 first alphabets, it's the base, which represent GBPUSD, the pound. And then the USD, it is the third alphabet that we've got, which represent what? Represent the code in the market. So if we are measuring the dollar like we did today, it simply means that we are anticipating that the dollar is going to gain in strength. So when you come back to the GBPUSD trying to apply the USD strength, obviously you are trading GBPUSD. If the USD if the DXY is gonna go up, it simply means that the GBPUSD is gonna go down, meaning the US is gaining strength against the GBP, which is the pound currency. Does that make sense?
Yes, sir. Yes, sir. For
So
this
that's how
pair,
so that's how you measure it. Let me give you another example. So let's say, for an example, you are trading USD JPY, and then on the DXY, we measured that the strength of the dollar was gonna gain momentum. So if you're trading USD JPY, obviously it's different. USD JPY, the first three alphabets is the US, which is the base, and then the JPY is the code. Meaning, if the dollar is gonna go up, if the dollar is gonna gain strength, USD JPY is gonna go up. Meaning, the first 3 currency, which is the base, it's gaining strength, which is the US dollar. I don't know if I'm making sense. I'm speaking about.
so I understand. For this, I want to understand clearly based on those candlestick.
No,
For example,
you can't understand it like that, my brother. You're gonna confuse yourself. Just leave it. Take what I told you.
okay.
Leave whatever the way you want to understand it. Take what I'm telling you and go make
Okay,
use of
thank
that.
you.
Yeah, don't try to
Thank
confuse yourself. Thank you. Another one who have a question, guys. You're more than welcome. We've got 2 minutes before we go to the next session. Another one who have a question? Okay, it looks like nobody have a question. Let's quickly go into the break, guys, so that we can come back and finish our session. We're probably going to spend about 25 minutes to 30 minutes on the Euro USD. Are we all good? During the new, right? What is that during the new? Let me live and leave you guys. Have a beautiful break. Get some water and then come back. And then let's look at Euro USD.